You are watching Market Watch, the brief overview of the key events from the world of finance. Today we will start with the oil market, which yesterday received an additional bearish fundamental factor, or rather even two. First, the United States confirmed an increase in oil production, exceeding the forecast growth of 30,000 barrels per day made a month ago. And secondly, the average weekly volume of oil exports from Russia by sea jumped to the highest level since the beginning of July. All this indicates that the probability of a shortage in the black gold market continues to decrease. As a result, for the 8th week in a row, American-grade WTI oil has been declining. Moreover, the decline in prices is taking place even despite the increase in restrictions from OPEC+. This is really bad news for the bulls, pointing to the prospect of a longer-term price decline. No less important for investors was the report on inflation in the United States, indicating the absence of a strong slowdown in inflation. And although the annual rate continues to decline, weak growth was recorded in November. Therefore, it is too early to talk about a change in the course of the Fed's monetary policy. The rate increase this year and even at the beginning of next year remains very low, but at the same time, we are not talking about reducing it. Given all this, today investors will closely monitor comments on the decision on the Fed's key interest rate, as well as the forecast from the American regulator. Given the extremely low probability of a change in the key interest rate, it is important to understand the sentiments of the voting members of the Fed's Open Market Committee. If they expect a significant slowdown in the U.S. economy in the first quarter of 2024, then demand for gold may increase. Otherwise, the pressure will remain elevated, because a strong economy is a direct signal for the regulator to keep rates at the reached level, which in turn will not allow the yield of U.S. government bonds to continue to decline. But this is already a serious problem for gold buyers, who previously preferred a fixed and fairly high income for short-term obligations of the American government. Shifting from traditional assets to the cryptocurrency market, let's pay attention to the increase in uncertainty. On the one hand, there have been no changes in fundamental factors, which means there is no reason for sales. But on the other hand, the collapse of Bitcoin by about 10% in one day sowed uncertainty among investors. As a result, on Tuesday, the largest cryptocurrency was trading without unidirectional price movement, indicating market uncertainty. At the same time, a return above $42,400 can bring buyers back to the market, while updating the lows of the current week can provoke a more powerful wave of sales. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.